It's a well-known truth that many young people nowadays are choosing not to marry. It was once considered taboo for couples to live together before getting married. However, more and more couples are opting to cohabitate and live together before marrying. Marriage is a lovely relationship that brings two people together who have a deep love for one another. It's a place where a lot of happiness and struggles are equally shared, and where a lot of lovely memories are made. Marriage has the potential to alter your financial situation in a variety of ways. It's not because you're living together and splitting bills. You don't have to be married to do that. It's primarily due to changes in your tax and legal status. Yes, you'll save money when you live together, and this is an important component of financial planning. But there's a lot more to growing wealth in a marriage than that. It goes without saying that being in a marriage can help you build long-term wealth, and we'll look at several ways in this video. Marriage, you see, is extremely beneficial to your wallet in the areas where it counts the most. As a result, the first point to consider is cost reduction. Mortgage payments, rent, and insurance are some of the highest expenses, but because you live together, these costs can be shared. Regardless of how true this remark is, it's critical to remember to preserve as much as possible. When the extra savings are used to maintain a specific lifestyle, it's all for nothing. Number 2. Scores on credit cards. Because a credit score is tied to an individual rather than a pair, couples can carefully arrange their debt to maximize their alternatives. If you need a new car and are saving for a new home at the same time, you may want to wait and make one purchase first, as you don't want the additional debt to harm your credit score. However, as a pair, you can agree that the person with the best credit score can take out a mortgage loan, while the other can take out a car loan. When a couple opens a joint account, their credit scores are considered throughout the approval process. If one of the partners has bad credit, they may be denied loans or face increased rates and costs. However, if one spouse has better credit than the other, their strong credit history can benefit the other spouse's credit score. Also, don't wait until you're about to make a large purchase to discuss credit ratings. It will be disappointing to get pre-approved for a mortgage only to be turned down because one of you has poor credit. Number 3. It ensures long-term financial stability. Financial security is greatly strengthened when two persons contribute to a home, especially in the event of an emergency. If one spouse loses their job, for example, the other can continue to support the family without having to utilize their funds, at least till the other finds another employment. Or it could be that one of the partners becomes ill later in life and can be cared for by the other without the need for hired aid, which is usually expensive. The point is that if one of you is going through a difficult time, whether medically or professionally, there is someone who can assist you and help you earn money. Being married also aids you in the event of a breakup. Both parties benefit from protection and the possibility of a fair distribution of marital assets. The legal process is more complicated in the event of two unmarried persons living together. Divorce legislation does not apply to unmarried couples in most states, according to the courts. Number 4. Healthcare benefits. The most significant financial benefit of marriage is likely high insurance. If one person has access to a company-sponsored health insurance plan, they can add their partner for an additional fee to the policy. If they both have health insurance, they can choose between the best and the cheapest plan. Married couples also receive significant discounts on long-term care insurance since they typically care for each other at home, decreasing the insurer's risk. Better loans are number 5. In a dual-income home, getting a bank loan is much easier. As a single adult, you usually only have your own income to consider when applying for a home mortgage. However, if you're married, your combined income will almost certainly qualify you for a larger loan with better terms. Keep in mind, though, that income isn't the only element taken into account by banks. Credit histories, amount and type of debt, and the debt-to-income ratio of the individuals requesting the loan are also included. Social Security benefits are number 6. As part of a retirement strategy, individuals can rely on Social Security benefits as a reliable source of guaranteed income. However, integrating the benefits to take advantage of the restrictions governing the claiming benefits is a vital aspect of any Social Security claiming strategy. Based on their own job records, the pair is eligible for benefits, The lower earning spouse is also eligible for benefits based on the work record of the other spouse, and an individual is also eligible for benefits based on the work record of a deceased spouse. Benefits from auto and home insurance are number 7. When you bundle your insurance needs, you save money on insurance. It's also been reported that married couples are less likely to be involved in car accidents than single people. As a result, you're more likely to acquire better insurance rates as a couple than you would individually. Getting married and staying married for a long time increases your financial stability as long as both spouses follow excellent family financial standards. Nothing can stop you from achieving it as long as you and your partner continue to be kind, considerate, and supportive of one another. Getting married, on the other hand, is merely the first step. What counts most is what you do after that. A good partner provides a good example and also contributes to the creation of an environment in which you may grow as a person and become a better version of yourself. Of course, this isn't possible when your relationship is in danger and you're considering divorce. In comparison to unmarried persons, married people see a 77% boost in their net worth, according to a study published in the Journal of Sociology. Another noteworthy finding is that persons in the research who eventually divorced saw their wealth decline 4 years before divorcing. This makes sense because people who have dependable partners perform better at work. They are promoted more frequently, earn more money, and are typically happy with their jobs. Finances are one of the most common causes for couples to fight or break up, so it's a topic worth discussing. Given that money is cited as a major source of conflict by approximately a third of adults in relationships, it's no wonder that financial issues are a prominent cause of divorce. Divorce causes more than simply financial losses due to legal bills. When you're married, you're accustomed to splitting expenses, and the cost of running 2 residences is significantly higher. The time and energy you put into the divorce process can have a negative impact on your professional life, and as many people are not aware, some of these issues emerge even before the vows are exchanged. That's why, before saying "I do," you should check to see if you and your partner are financially compatible. Every relationship is built on the foundation of financial compatibility. Although money is important, you must also have goals and habits that are compatible. When you have 2 people, one who enjoys spending money on the latest trends or gadgets, and the other who prefers to save for the future, serious issues are certain to arise. What matters more than how much money a person earns is how they spend it. Even people with a lot of money can have disagreements if the money isn't spent on items that they both agree on. As a result, it's critical that you and your partner agree on how you'll spend or save your money. Love, no matter how much you want it to be real, isn't enough to keep you going. It may seem superficial to evaluate a possible partner's income, but it's just one of the many financial considerations to make before settling down. Spending your life together necessitates making huge and minor financial decisions together. A marriage has a lot of financial components to it. It entails covering living expenditures, the cost of raising children, retirement planning, insurance, and financial emergencies. This person's financial future will be connected with yours, and if you're wise, you'll pay attention not only to how much they earn now, but also to what they'll likely earn in the future. As a result, before picking someone you want to marry, give it a lot of thought. Your general happiness is influenced by it, as is, to some extent, your and your spouse's financial success. So the question remains, does marriage make you wealthy? There is no simple solution to this, as it is dependent on a number of factors. One thing is certain, marriage is beneficial to your finances. Thank you all for watching, and if you made it this far, please consider subscribing to the channel if you haven't already, as well as liking and sharing the video. Thank you once more, and have a wonderful day.